Hello everyone. So today we are going to discuss the recently launched report on trends and progress of banking in India. Okay. So this is the recently uh, report. This is the recent report launched by RBI, and it is focusing on the progress and the trends in the banking sector. So this video will be going to be in several parts, where in each part we'll be covering a certain topic from the report. Okay. So in this part, we'll be taking the first chapter of the report, that is the perspectives, right? So in this chapter, the report talks about the bank's profitability has increased as the NPA has gone down. Okay. So it is at its lowest level in 13 years. So this is a major fact at 2.7%, which was recorded in March 2024. All right. Now, further, the report talks about the regulation and supervision, where RBI is coming up with a Connect to Regulate program. Okay. So, what is this Connect to Regulate program? So, it is a dedicated section on the RBI's website, which is there for stakeholders to share their inputs on topics announced by the RBI. Okay. So, here, stakeholders' view will be taken by the RBI through this program. And this initiative is there where you can go to RBI's website, and from Connect to Regulate tab, you can give your feedback. All right. So it further says that under the process of supervision of banks, NBFCs, and other financial entities, the focus is now on early detection and preemptive correction. So, what is this preemptive correction? That means we will be taking steps even before the event has occurred. Okay, so it is preventive in nature. The enhanced offsite assessment framework is more analytical and forward looking, with introduction of macro stress test, early warning indicators, vulnerability index, micro data analysis, and use of AI and machine learning. All right. Now, further, they said that the engagement with supervised entities is also being strengthened through Daksh portal. So this portal is already there. Okay. So it is a super tech initiative with end-to-end workflow solution to streamline the and strengthen various supervisory processes. All right. So next part in this report that is important is the new concept, or it is an old concept but it has come in news now repeatedly, that is the top up loans. So what are top up loans? So top up loans provide additional credit facilities to customers on the strength of the existing collateral. Okay, so it has been explained further that the strength of the existing collateral such as houses, automobiles, or gold. Many regulated entities may perceive such secured loans as having lower risk. Okay, so top up is the extra loan that a person takes from the bank on the existing collateral that it has submitted to the bank. Okay, so now these additional facilities are often sanctioned with minimal processes and due diligence and with liberal underwriting standards. Okay, so RBI is worried that such top up loans are being issued with minimal supervision of the banks. Now it can cause risky behavior in credit lending. That's why RBI has instructed that all top up loans extended by regulated entities against movable assets which are inherently depreciating in nature. Okay, so it is specifically here talking about the movable assets, and most of these assets are usually depreciating in nature, right? So the RBI is instructed to consider such loans as unsecured loans for credit appraisal. Okay, so the collateral already taken will not be considered against such loans, and the loans that have already been provided by the banks will be considered as unsecured. All right. Then here another thing is there, that now banks and NBFCs are presently not permitted to levy foreclosure charges. That means if somebody has to close their loan accounts, then they can submit their amount that is owed to the bank early and close their loan accounts. But in some cases, there are certain charges that have to be paid by bank. Now, RBI banks and NBFCs are presently not taking any foreclosure charges from any retail individual borrowers, okay, or with any businesses. Now, RBI, the proposal is to give this functionality to small and micro businesses too. Okay. So if these businesses want to foreclose their loans, then they will not be charged any foreclosure charges. Okay. So this was regarding that. Now, next is the know your customer. So here certain amendments have been made in the KYC master directions. So here they are saying that it is now mandated that regulatory entities to seek from the customer or retrieve from central KYC registry the customer's KYC identifier for the purpose of verification of identity of the customer and ongoing due diligence. Okay. And it says that it also mandates the use of central KYC registry for the purpose of re-KYC or periodic updation of KYC for regulated entities. So this was the amendment that has been done by the RBI. Okay. Although it is not that important from exams perspective, but it is a new change that has been brought up by the RBI. Now, moving further, so here in this payments and settlement systems, here different payment settlement under various components have been discussed in this report. Okay. Now, next thing that is important is the internationalization of payment systems. So under this, what is important is that the currently our this arrangements of internationalization of payment systems have already been operationalized in Singapore, and these are the other countries that have been already these payment systems are available. Now the deployment of UPI like payment system is underway in Peru and Namibia. So this is the new development. Now in June 2024, the project Nexus, as we all know, okay, so it is an old development. So RBI joined the Project Nexus, a multilateral international initiative to enable instant cross-border retail payments by interlinking domestic fast payment systems to the of 5 countries. Okay, so these are the 5 countries, and it is still relevant. So the thing is, we need to remember the names that are involved in the Project Nexus. Okay, so this is important. Now, next thing is adoption of emerging technologies. So this is, I think, the most important topic of this chapter. So here, various RBI initiatives have been discussed. So initiatives leveraging technologies such as unified lending interface. So this was in news already, right? And open credit enablement network are expected to redefine credit access, particularly for small businesses and individuals. So these names you have to remember. Now, next, it is written here is the financial sector landscape is witnessing paradigm shifts with the advent of emerging technologies like AI, ML, tokenization, and cloud computing. While the benefits and their adoption are many, the attendant risk there are certain risks involved like algorithmic bias, explainability of decisions, and data privacy are also high. So these risks you can write in your answers also. Okay. Then to address the attendant risk early in the adoption cycle, the Reserve Bank has announced a committee. So this committee has been in news nowadays. Okay. In today's newspaper also it was covered. So you need to remember this committee that has been formed by the RBI. Framework for responsible and ethical enablement of AI. The short form is Free AI, to recommend a robust, comprehensive, and adaptive AI framework. Okay, from here, this committee name is important. Now, for digital lending, to aid the customers in verifying the claims of digital lending apps associated with an regulated entity, the Reserve Bank is in process of creating a public repository of digital lending apps. Okay, so this is in progress. Okay. Next is scaling up the ULI. So ULI has already been introduced. Now the focus is towards scaling of it. So its earlier name was public tech platform for frictionless credit. All right. Next, here certain update has been given for the CBDC, where it says that CBDC pilot currently enables person-to-person and person-to-merchant transactions using digital rupee wallets provided by pilot banks. The programmability and offline functionality in CBDC retail are also being tested. So this is under progress currently. Okay. The solutions to enable offline functionality in CBDC retail borrow both proximity and non-proximity based. Okay. So here offline functioning of CBDC is currently in progress, right? For making transactions in areas with poor or limited internet connectivity are also being tested in a closed user group. The functionality will be scaled up through pilots in a gradual manner. Okay. Now, another update is that, as we know, the national strategy for financial inclusion was up to 2025. So, a new strategy is being developed for the period 2025 and 2030. Okay. Now, another thing that we need to remember is that RBI has launched another app or another tool, that is mulehunter.ai. So this tool will be used to detect the mule accounts, okay, that are carrying out any criminal activity. Okay. So would be an AI based tool. So it will help in fast recognition of such mule accounts. Now, next is what are dark patterns? Okay. So dark patterns are design interfaces and tactics used to trick users into desired behavior have emerged as a new form of mis-selling. Okay. So normal question as one marker question where this has been given and they can ask you the what is this? Okay. That type of question can be asked. So the answer is dark pattern. All right. Now, another topic here is related to the climate change. So, an update from the central bank is given. What are the efforts that have been taken place against the menace of climate change? Okay. So, in line with India's commitment towards net zero transition, the RBI has taken proactive steps like including financing renewable energy projects under priority sector loans, introducing green deposits, okay, issuance of sovereign green bonds, allowing investment and trading in sovereign green bonds by eligible foreign investors in International Financial Services Center. Okay. So now sovereign green bonds can be traded in the gift city and issuing a draft disclosure framework for climate related financial risk for public consultation. Okay, so these are the steps that have been taken by the RBI against climate change. Now, further, they are writing that the RBI is also in the process of finalizing and issuing a guidance note on scenario analysis and stress testing of climate related risks for regulated entities, covering modeling techniques, scenario considerations, and methodologies for carrying out stress testing exercises. Okay. And the Reserve Bank aspirational goals for RBI at 100. So currently RBI has completed 90 years. So RBI at 100 will be aspirational goals, and in this they they have included establishing a robust regulatory and supervisory framework to effectively manage challenges arising from climate change, enhancing the resilience of payment systems against climate change, and collaborating with the government for finalizing a comprehensive taxonomy. So this is a roadmap for the next 10 years against climate change, prepared or being prepared by RBI. All right. Now, next is Reserve Bank Climate Risk Information System. So, climate risk assessment by regulated entities would require inter alia high quality data relating to local climate scenarios, climate forecast, and emissions. The publicly available climate related data are characterized by various gaps, such as fragmented and varied sources, differing formats, frequencies, and units. Now, what they want is they want to consolidate all these information into one portal or one database system. All right. So that's why Reserve Bank climate risk information system is being created. So here they are writing that to bridge these gaps, the RBI plans to create a data repository. Okay, this is the name RBI Chris. The first part of the repository will be web-based directory listing various data sources, including meteorological and geospatial data, which will be publicly accessible by the RBI website. The second part will comprise processed data sets in standardized formats. Okay, so this is the new development against climate change. Okay, so a new repository of data is being created by the central bank. So this is a overall conclusion, and this completes our first chapter of the report. So that's all for today's session. Thank you and have a nice day.